Everybody, good morning welcome to the show. Donald, Michael, John, Eric, Diane, excuse me, Rosalind, Rex, Rod, Indy, Valerie, Helen, Ted, Brian, Anthony, Dan, Craig, Rizio, Don, Kay, Starstones, Gary, Tara, Robert, Sergio, Gregory, Amy, Andreas, Darren, channel member Joseph, Cliff, channel member Sledge, John, George, Jacques, got channel member Dan and channel member Brian in the house too. Thank you all for being channel members. And remember, if you want to chat on the stream while I'm live, which I'm live right now, but maybe you're tuning in when I'm no longer live, you have to leave a comment down below. But if you want to chat with me while I'm live, click the button right over here. Be a subscriber on the channel. A few seconds later, you can chat while we're live. This is like 9:15 in the morning, Eastern time. So probably after about 10-ish, I'll probably no longer be live. And that means the chat will be locked. And you can't talk. But while I'm live, we can chat. Hey, Douglas. Hey, Mark. Kimberly, my favorite subscriber, favorite follower in the house. How you doing? How you doing? Anyway, welcome to the show, everybody. And PPI out, right? PPI? Anybody making trades based on that already? What a heck of a dip and rip yesterday. Almost getting through that 55-60 area. Almost. Look at this right here. Look at this. S&P 500 has an inside weekly bar right now. Last week, ouch. This week, sitting there. The daily chart, we finally did get above. Gotta get above this level right here. That level comes from right back here. This high. Right there. Right there. Right there. Right there. Get above that. Odds are cruising up. Probably 85% likely we're going to at least this 5750 area right here. Maybe this 5800 area right up here. Maybe 6,000 right up here. Maybe. The odds are like 75% for this one. Drop down to 70-ish% for this one. Drop down to like 45, maybe 35, 45% for that one. So drastic drop off for that move right there. Drastic drop off. You may be like, JT, how do you even know these things? Because I do a lot of testing. Do a lot of math in the markets. And built a tool called, I call it the Apollo algorithm right here. Now, you can subscribe to the Apollo algorithm and get 30-minute based alerts, but this thing actually pumps out, for me, it pumps out any time frame, and I can backtest the results here. And I can change the targets and all sorts of things like that. So that's how I get the statistics. And I do thousands of these, tens and thousands, hundreds of thousands of these tests across all sorts of tickers. I have databases I've built. So if you're new here, I'm a very math-based, inclined, data-based type person. And I don't just trust the mainstream media or the establishment. Don't have a Bloomberg terminal, any of that fun stuff. I do all the manual hard work myself. And, well, this is a high probability setup if we can get above that spot right there. We've already triggered. This setup is already triggered. Like it triggered right back here. Right back there. Right there. It triggered. So that right there is likely. Now I thought we might have a fail. Could be, this was a warning. We could fail, but we just barely held on to the requirement that we needed to keep it going. And just barely. I tell you, we get below 5,300, it's game over probably. for this setup. But right now, still intact for going higher. And for those of you that are here for the PPI, roll down. Let's look at it. Let's take a look. Dun, dun, dun. Today is Thursday. Came in spicy. Yeah, this is funny to me that it's colored wrong. It should be red. That was prices coming in hot. That was prices coming in hot. Now, I was saying that, we probably get a 0.2. We got a 0.3. 0.1, we got a 0.2. And then unemployment claims came in at 230, but when you actually do the adjustment on the numbers, it's actually only 177,000 jobless claims, and that's like a record low. When they actually do when you look at the report and you look at the adjusted number, it's like 177,000, and that's like a record low with unemployment rate dropping, and the unemployment rate we got last Friday coming at 4.2, and then unemployment claims dropping faster than the unemployment rate. It's kind of weird. Something. How can they? That's inflationary. If the jobs are actually that strong, and it doesn't really support a big rate cut. So this is like what we're setting it up for next week, is that possibly they only cut a quarter point and disappoint the markets. I think everybody's kind of baking in a half a point cut, and they keep baking these numbers over here that maybe there's problems going to be cooking. All right, tomorrow, nothing. We're pretty benign on economic news. We get this consumer sentiment at 10 after the market opens tomorrow. But otherwise, not much. And it's Friday the 13th. So anyway. All right. Howdy, Tom. Helen. Howdy, Ray. From DFW. And Soma 9x9, TLT. This is not a request show, just so you know. I don't usually do requests on the morning show unless it's got something spicy going on with it. The request show is Tuesday at 5 p.m. Eastern. Today, got to do this part before we talk trades. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation tended to be informational, educational, fun, and entertaining. Hopefully I entertain you. If not, you got lots of other stuff you can go watch. Thanks for spending your time with me. Honestly, thank you. Now, this is not a recommendation to be buying or selling stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. There's a substantial risk of loss if you do trading. And don't buy stuff from gurus like me if you don't trust me. And, certainly watch out on other people. There's lots of snakes, liars, full of crap people in this industry. I try to be Scout's Honor, try to be truthful as best I possibly can be. If you desire personal financial advice, you just need somebody to tell you what to do. That's not what I do. All right. You're going to have to hire and consult a financial advisor to, have somebody to tell you what to do. It's not what I do. I just share what I'm doing, and hopefully we're on the same page. Now, I do have a bonus trade today. It's a pretty spicy one too. Let's see. Pretty spicy one. It's a big name. It's a Mag 7 in the bonus trade. So we'll discuss that here in just a few minutes toward the end. Stick around if you really want to see it. I'll discuss ways to play it, and I'll probably post the trade in Discord later if I actually jump into it. It's one that I'm highly considering getting into it. So, I'm just saying, not telling you what to do. You got to make a decision for your own money. And here we are. The market opens about 4 minutes. Dun, 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 dun. S5. Look at this. Look at that. We made a lower low. That got down really close on that flush out yesterday. That made a lower low than we had right back over here in August. Look at that. That is interesting to me. Maybe we're done on this flush out and we're going to go cruising higher again. that can be done. Like, it doesn't have to touch the 20 line, like, to be the bottom. Like, we didn't do it here. We didn't actually get all the way down to 20. It doesn't always have to touch 20. Look, right here. It doesn't always have to touch 20. Now, if you're unfamiliar with this chart, this is the number or percent of S&P 500 stocks above their 20-day moving average. It's a giant market oscillator, all right? When we're at the top, I like to watch this because when we're up here, usually means we're set up for something like that. And when we're down here, it usually means we're set up for something like this. Now, what does that mean? When you're looking at the percent of S&P 500 stocks above or below their moving average, the 20-day in this case, that tells you that we're going to get a pullback in the market to pull more of those S&P 500 stocks down, or we're going to get a pop in the market to pull more of those S&P 500 stocks above their moving average. All right, this is a broad brush. You know, there's 500 stocks, and if 80% of them are above their 20-day moving average, that's opportunity for a pullback. And if 20% of them, in other words, 80% of them are below their 20-day, that's opportunity for the market to rally. All right. I commonly hold that when everybody in the market kind of tips the boat to one side, we're going to do the other thing. All right. Perma-contrarian, if you want to look at it that way. So right here, this kind of tells me which way they're tipping the boat on the 20-day, you know, in a 20-day moving average frame. Now, we also look at S5 FI, stocks above the 50-day. This one, still working on this uptrend. And we may go back, make a new high. This is interesting right here. I do think it's interesting. We are due for a visit of the bottom. We haven't been down there since back here in October, almost a year ago now. Golly, so hard to fathom. It was almost a year ago. See how we were hanging out down here a year ago? Popped up, and we just kind of been chopping in between. We're due for a revisit. We've had periods where it lasts for a while. We don't go visit the bottom for a while, but eventually we get down there. And eventually we break out the top. Eventually. It's just an indication of what might be coming. All right? Indication. Things I've said before, things I'll say again. Eventually, we're going to get down to the bottom. Eventually. Maybe not today, maybe not tomorrow. Eventually, like, we're not staying up here forever. It's inevitable. We're going to pull back. We're going to go back to the bottom. Now you can see. Sometimes we miss the bottom. We did get darn close right down here. So this could count as having visited near the bottom, similar to the S5 TW. Right there in April. But even in August right there, not even close. Not even close on the stocks above the 50-day. Then we look even higher time frame, stocks above the 200-day. This one moves very slowly. Takes years to go from the bottom to the top to the bottom. Tends to just kind of trend. We did touch out the top, but I think we're going to make a higher one, like really, really crank this thing up. Probably get 90% of S&P 500 stocks above their 200-day moving average before we crank this thing over. That's kind of what I'm feeling right now. We may rally one more time right up to the top. Really get the boat tipped to one side. Anyway. Welcome, everybody. Glad you're here. Hey. Channel member Ivan. Glad to have you. Rick, JB. And if you want to be a channel member, links in the description down below. I do share some extra content, behind the scenes stuff. And I've got more plans for more content. I just got to figure out exactly what it's going to be. It's all in flux, if you will. So ES right here, pushing a little higher. Somebody commenting on the video. So just be a channel member. You can come chat with us live. And right here, it's a little bit of flash right there on the PPI number. On it, maybe it's the unemployment. I don't know. Look at that dip and rip yesterday. That got deep. That got deep right there. Now, something I was watching, that low, this high. Look at that. We sat on that 76 retrace right there. Delete that. Sat on that 76 retrace for like half an hour. In Discord, a couple people are like, why did you get long? That's why I got long. We sat there for a half hour, and then we broke higher. I got long right there, and then we rode it up. I got out like right in there. I missed like another 50 points of potential, but hey, you know, got my piece, moved on. I was happy. I had stuff I was doing yesterday. So that was a pretty sweet trade. I booked 30 ES points. An ES point is $50. So do the math on that. It's like $1,500. Not too shabby. Not too shabby. Do it again every day if I had the opportunity. That was a nice classic dip and rip right there. We've done the extension. Take that high, that low. See, we're sitting right at the 618. Right there. Do it a different way. If this was a measured bounce, which it meets the minimum criteria of a measured bounce, we'll probably push right on up to that 55.60 area right there. Right now, we're in no man's land. It could go down. Caution is advised. Perma-cautious. Perma-contrarian and perma-cautious. So we're right in a zone where we could do another retrace. We may push it right up to this. We may push it right up here. Retrace back to here, and then do the breakout, and then do another retrace before we can get out of here. That looks a lot like a wave 2. Wave 2s tend to be very vicious, and then wave 3s are very enthusiastic coming off of a wave 2. So far, that looks like what we might have. We do a 3, finish the 3, 4, and 5, then retrace again, and break out. That's, this looks like a 1, 2, 1, 2, and we could break out in a big way, and maybe go up to the 6,000 level. That's entirely possible. So I know a lot of people are like, JT, what time frame, what pattern are you talking about? There's a lot to this. All right, if you're new here, welcome to the conversation. Subscribe, make sure you hit the alerts, and keep coming back. Like, there's a lot I go through every day, and just having to get lucky on a lot of these predictions. So still bullish, still looking higher. NQ did a very, very nice move also. Right here. Oop, grabbed the wrong high. Very, very nice. Very nice. I really, 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 really like this potential setup for an explosive continuation here. We have that measured bounce off this low over here. And then we have another measured bounce. Like, this is just setting up measured bounce after measured bounce nested. We could get an explosive move up. Like, yesterday was a nice move up, but we could maybe set a record up day, 200-300 point up day. That'd be wild on the, and I'm talking about on ES, not on NQ. It'd be pretty wild. Pretty wild. It's all culminating around the potential FOMC next week. Now there's the risk. The risk, they do a quarter point drop or quarter point cut and disappoint everybody. But there's also the risk that they do a half point and the market just goes freaking crazy. All right. Be careful out there. Be careful out there. If they cut a half point next week, this thing could rip. We could rip to all-time highs. If we tip all this stuff, if we tip all these indicators that I went through up above 80, we're setting up for a mega correction. It's epically scary. If we popped all the way up here, even higher possibly, it'd be crazy. I am just expecting this right here, but yeah, I got to talk about these things because if you don't know, if you don't have it in your mind, you got to, I mean, you got to have it in your mind, like what are the possible outcomes? All right. Russell has that measured bounce potential. This one didn't have the big, quite the big move up like we saw in NQ and ES. Lagging behind a little bit. We may have another one of those giant move ups like we did right back over here. Could do this again. See how we did that? Crazy move up for like 4 days. We do that again right over here. Might do another giant move up. This one did fire off the long right back over here. It did. Be careful betting against it. We fired it off right there. Right there. Fired off the long. That's a 90% historically likely trade with a nice fat profit factor on it. Now, the downside is there's only 9 trades in the history. Not really a statistic population. But that's indicating the bias is long right now. We retraced and did a measured bounce setup, which can be a very powerful, very, very powerful setup when it's combined with the roadmap bounce, which it did. This is basically what I call the rocket ship pattern. Draw a SpaceX rocket, whatever. We can blast right off. It could go higher than my target even. That's set up on NQ. That's set up on Russell. It did not meet the criteria on S&P, but it's going to ride along. It's not a, there's no way that NQ and Russell are going higher without S&P. CL, looky. Sometimes I get lucky. How long has that target been there? Anybody remember? It's been there a while. Looks like the gold trade worked out. Good job for those of you that got out. Booking profit. I'd have to go dig in and see if mine closed. Hopefully it did. Right there. Holding support. If that holds support, this can rocket higher. If this breaks out in a big way, maybe they played their hand too early. Right? They're pushing this down. They were hoping to get continuation lower into the election. What if they played it too early? And it actually does this right into the election. Hey, my buddy that does mules, he was in the office 2 days ago. He was like, I gotta go, guys. I got somebody coming looking at a mule. I gotta go try to sell a mule. And my dad's like, oh, you taking one to Pennsylvania this weekend? He's like, no, I got somebody local wants a riding mule. I thought it was funny. Anyway, my friend keeps all his money in mules because they aren't very liquid, so he can't just go liquidate them and spend his money. There's not very many mule breeders around, though. That's look at gold. Look at gold. Potential to break out. This one can run. Kapow. Right there. Beautiful potential. I like it. I like it. I like it a lot. So hopefully the gold trade worked out for anybody that took that on Gold Rush. I'm probably going to be out and not waiting around for something over the weekend. Bitcoin. Look at this. Struggling. This gives me a little concern right there. Cannot break through that roadmap line. 3 days of consolidation. Now, we did do 3 green days in a row on the spot market. Usually, we get 2 weeks of continuation. That resistance right up there. I do want to see that rally up in there. Right now, we're just not doing it. Just not doing it. Now, if you're unfamiliar with what I'm talking about, usually when we have 3 green days in a row on the Bitcoin spot market and the Ethereum spot market, we will get 7 to 21 days of continuation. I usually say 2 weeks because that's typically what it is. Average, average 7 and 21 in 2 weeks. So if this plays out, we may see a rally right up to that resistance. Now, the flip side, I don't think this is complete right here. I think we need one more dip on Ethereum before we can rip. That's the flip side of that analysis right there. So, dun, 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 dun. Silver. Oh, yeah. Come on, baby. Come on. Come on, silver. I am long silver in a pretty big way. Hoping this works out, because this is the same pattern that we have on NQ and Russell for a large potential upside breakout. 35 is my target, but we may go to 40 if this thing really gets smoking. We may rally right up to 40. Now resistance is right here, right there. This one has not fired off that long trade. Not yet. Not yet. We don't have the confirmation yet. You see it doesn't have any entry in there. 72% likely if we do fire it off. We'll see. We'll see. Dollar. I was going to say long AF on silver. DXY. Consolidating. Not really breaking up. Not really breaking down. Resistance right here. In case you're new here. Resistance here. Support's here. Hanging in the middle. Sideways. Break down. Down. Break up. Up. To the next resistance, which is at the roadmap line at this point. There we go. NKD, Japanese futures, Japanese stock market. Did we get the minimum we need for a measured bounce? This could be indicating we're going on up. Up there's the target, 44,000, right there. OPEC has nothing to do with prices on oil. It's not going to matter one dang bit. I'm telling you. Once you can quit listening to anybody, if Everett's here, hey, Nikki too, like Everett and Nikki, they'll tell you. I predict oil prices pretty dang close without paying attention to any OPEC news, any production news, any of that crap, because it doesn't matter. It's all sentiment. It's all sentiment. Anyway, that looks like if we can break out above here, we're coming right up here. Right there. Now, so we're going to look at gainers and decliners. And I go pull pre-market gainers. Anything moving $2 or more up goes on the gainers list. Anything moving pre-market $2 or more down goes on the decliners list. I pull this pre-market and build the list. And sometimes it finds interesting stuff to look at. Sometimes not. This one popping right into the roadmap line, maybe resistance. That's a 3-wave up. We could get continuation lower. That is right into the danger zone, bouncing off of the roadmap line. If we bounce off and go lower, that low target could be down here, right like that. FUTU. So close on FUTU. Roku, nice pop. That's probably to the target on that little baby. Yep. 75. Now it could extend it up into the box. That has some massive gaps over here. Massive. Look at this gap down right here. That's where that box comes from. This gap over here. We just gap through it, or we just push through it right there. Into the next, we're getting into the vicinity of the next gap up. Then we're gonna have to work through this gap. Now, why are gaps important? Especially gap downs. When we're coming up from the bottom, people bought here. People bought here. Like they bought right there. They bought. They got caught in the trade. They're wishing and hoping this comes back so they can just get their money back. I just want to sell when I get my money back. That's why these gaps become so important on the way up, and they tend to be a point where we pull back down from before we can get out of here. That's why right here, we filled that gap, we pulled back down, found support, then launching through. We're going to come back up, probably make it to the top of this gap, and then do a pullback before we can go even higher. If we go higher. You know, it could be a case where we go back down like that. That's why gap fills are so important, especially when they do a giant down gap like that. Oh, nice sledge. Glad it worked out. TNON Medical. That's a dumpster fire chart right there. Good grief. Dumpster fire. Don't trade this stuff. Now, if you're new here and you're like, why would this be a dumpster fire? What makes it a dumpster fire? Right? Look at this. This chart is nasty, right? Like it has, there's the roadmap line. It has never been above the daily roadmap line. Never. Number one. Number two, look at how bad, I mean, look, now you'd be like, well, when was it trading for 760? It was never, because we did reverse splits right here. So you used to have 10 shares, now you got 1 share. You used to have 100 shares, now you got 10 shares. But we did a reverse split again. So now you used to have 800 shares over here, and now you've got 1. For every 800 shares you had over here, you've now got 1. Because of this reverse split and this reverse split, what it does, it collapses the number of shares available. And so this price never was, we were never up here. We were never at 4,000. It has an 800 multiplier on it. So it was, you know, like 5 or something like that. All right. It used to be at $5, and then it reverse split 10 for 1. And then it reverse split again, 8 for 1, and put an 800 multiplier on it. So when we see reverse splits and price action under the roadmap line like this, approaching 0, that's what makes a dumpster fire. It's a horrible chart to try to get involved in. They're not likely to turn around. It's not likely you're going to make a bunch of money. It's more likely you short this baby right here and ride it down into the dirt right there. NTGR. So here's the thing, Kevin. The FOMC meeting doesn't matter. That's what really blows people's minds. The news doesn't matter. It doesn't matter what the Fed does. It's really difficult for a lot of people to wrap their head around. Right here, the market's saying that the Fed's going to cut rates. Fed's going to cut rates right there. Market's pretty sure the Fed's going to cut rates. Pretty darn sure. I did mention before, if we broke lower than that low right there, probably going to cut rates. They could cut rates a whole point, because that's how far ahead of the market they are. They're between 5.25 and 5.5, and the market is at 3.6. They could cut 1 whole point and still be above the market. I don't think they'll do that, but they've got almost 1.5 points worth of rate cut above the market at this point. Why do I watch this chart? Look, every time, the Fed chases this rate. But every time the Fed rate has gotten above, after a giant set of rate raises, we have a market meltdown. 2000, anybody remember what happened there? Anybody remember what happened in this time frame? Anybody remember what all happened in this time frame? Just be careful. Just be careful. And if they do a big cut, they screw up the carry trade, and then who buys the debt? I mean, this is like, we can have another big financial crisis. It's not that the market is going to go down forever. We're going to get a giant correction. All right. Now it could break the market for a long time, and we've never seen it this bad before. I mean, there's all sorts of possible, right? Anything's possible. It's what's likely to happen. If we do a big cut, we're likely to pop the market. Likely to goose it higher, and then inflation comes ramping back, and then they have to do a rate raise again. I still think we might raise rates before we get the ultimate financial crisis. We'll see. We'll see. There's not many people talking about the fact that we may dip and rip on these rates. Watch out. Watch out. I think they probably should have held off back here. Maybe almost a whole point lower, at least a half point lower than where they stopped. But we'll see what happens. Once they crossed right here, they did they basically did 2 rate raises more than they should have. That one and that one are more than they should have. I kind of drew the boxes for the rate raises. We'll see if they cut next week. Netgear. Wow, that's a stock I haven't looked at in ages. There's no high probability setup here though. Nothing set up at the moment. Got resistance right there. If and when we get up there, just busted through the gap. Talk about a stock that hadn't really gone anywhere in a long time. It's not exactly the picture of bullishness right there. Be very careful on that one. If I was trying to chase a trade, I wouldn't expect giant upside. I mean, we could get, 20 to 30 is like 50%, but still. DEO, that's still biased down. Rejected off the roadmap line. Even though it's on the poppers list, that's still potential to go down to 114. MNPR, there's another dumpster fire. See a little reverse split hiding in there. Another dumpster fire right there. I wouldn't touch it. Wouldn't touch it with your money. Wouldn't touch it with money you said, hey, go burn this money out back in a fire pit. I wouldn't even put it in that. TLN. Topping out. Looks like it's going to retrace. I would be cautious. If you're long this, watch out for the pullback. And watch out for the pullback. Topping out right there, 150, 160. And it's going to be due a pullback. How do I know? Look back in here. So, not got a lot of history. This was the pullback after it did this big up. Another big up. Another pullback. Now it can find support right in here. We almost touched that, but can push up a little more, come back to there again, and then set up another move. And that may take a little while to work through. CVNA. Ooh. 4-hour bounce again after hitting that high, that low would break through the 618. 81% likely we're going up. Nice fat profit factor too. Nice trender. It's only got 11 trades in the history. So that level above 147. Looking for 165, 169 right there on the potential upside. Not too shabby. Not too shabby at all. Google. Nice little pop. Probably still working on getting down to support down here. Can the market go higher without Google? Yeah, it's entirely possible. Right there. So obviously Google is not my bonus trade pick. Bill Holdings. This looks like it's still set to go down. Even though these are on the poppers list, these are all pretty bearish looking charts so far for the majority of them. And a few things are good, but a lot of these looking kind of bearish. Like that one still looks like we're probably going to go lower. SMMT, Summit Therapeutics. This is a biotech. Be careful on biotech. Biotechs don't always follow my patterns. In fact, a lot of times they just do their own thing. That going crazy. This looks like the bubble pattern. Be careful for a pullback, consolidation, something in there, because that indicates it may go back down like that. If you have no idea what I'm talking about, check this out right here. Bubble pattern, go exponential, get the pullback, consolidation, and we pull back. This is the way price moves. Like there's several different ways price move, Kevin, and this is one of them right here. It's just human psychology. It like has nothing to do with news. AI has nothing to do with the potential of AI changing the world. It's all psychology. It's all hype. It's all euphoria, complacency, and then when it starts down, people get angry, depressed. Like the .com bust was this way, right? AI bust will be this way when it happens. The meme coin bust, you know, all the altcoins, when they bust, it'll be just like this. It's been like one of the longest ones. GME did this. Tilray. It's countless examples. And we see it on smaller scales too. All over the place. SMCI, right there. Don't get caught up in these. Like when you start seeing that, when people talk about a trade that just don't fit in your mind, talking about a trade, I got to tell everybody I know to buy. Think about it. Think about it. See that large consolidation right there? On the way down. We already did that. Party's over. Unlikely to go higher from here. Now it could, but unlikely. Unlikely. Probably going to come all the way back down before it can ever go higher again. GME is a prime example. We keep doing these little baby versions all the way inside here. Then the hype train keeps going, but this is likely to come all the way back down eventually. mRNA. There it is again right there on a little baby scale. Consolidate. Right back down. They don't always go back to the lows. Sometimes they find a higher low. This pattern plays out over and over and over. It's never exactly the same, but it's kind of the same. That was it right there. That was the bubble pattern. It went exponential, consolidate, and right back down. OXM. Now, that's not the only pattern I look for. That's not a pattern I trade. That's just a pattern that shows up. OXM. Apparel and footwear. That's looking pretty bad. Right down to the bottom. So the two patterns I trade. If you're new here, let's just talk about them really quickly. We haven't talked about it hardly this week, I don't think. So first off, you see the orange line, the roadmap line, right? There's two, there's a bullish and a bearish pattern I like on these, and they both are the same pattern. So bullish pattern first, we break up above it, we retrace down to it, and of course it would be sitting right over here, not all the way over there. But we retrace down to it, and then we bounce. Right, that's roadmap line. That's the roadmap line, the orange line. Roadmap line, bounce. We go take the fib line from this high down to this low. And when we cross above, when we get a close, a candle close above the 618, the high probability trade is to ride right up to the 1272. And I go 90% of the way there, which is the 1.1448 right there as my conservative target to exit right there. That's a high probability. It's not a large trade, but it's a high probability trade. Like 75% of the time, this works. Has a positive profit expectancy most of the time. Not every ticker does, but most of the tickers do. That's number one. And, you can flip this whole thing upside down and do it the other way. You can do it to the downside. And that's what I, commonly you see me measuring them to the downside. That's where, let's just do it a little different here. We got this arcing off a little bit. We'll see price, exhausting to the upside. And we'll see it break down below the roadmap line and retrace up to it. And a lot of times you'll see me draw a fib line like this. When we break down below this zone, we're highly likely to go right down in here. Highly likely to get that continuation right down in there. And then find support and then possibly reverse. So, that's the same roadmap line bounce, just upside down. I don't trade the downside one because the market doesn't tend to trend down. Like the tendency is to trend up over time. So, now the other pattern that I like, that I watch, the measured bounce pattern. We've got price by doing this. We get a move up. This is very similar, right? Except it doesn't involve the roadmap line. Now we get that, we run the fibs like this, and we get a support right there at the 618. Right in this zone right there. Now, the minimum takes a 50%, and if we get a little deep like we did on the S&P yesterday, 786, that's okay. Ideally, I want to stay right on the pink line. That's why it's pink and not blue. I want to stay right on that pink line. And this creates the opportunity for a large upside move, much bigger than just the 1272. We could get this extension of the first move. We get this repeat of this first move, and we get an extension of it up in here, potentially. Now, it may stop at the 1272 extension of this first move. So instead of being an extension of the pullback, it's the extension of the first move. If it's really bullish or going to get continuation in a new pattern, we'll get the 1618, possibly the 272. This is a much larger potential move right there. But the downside is, probability-wise, it's lower probability to work out. Now, when it combines with the ultimate, when I talk about the rocket ship pattern, is when both of these patterns come together at the same point, and we get the roadmap bounce right there. This all of a sudden ups the probability. You stack the large potential gain on top of the high probability to work out. That's a rocket ship. That creates a giant opportunity to make a bunch of money if we get the continuation. Right there. So those are the tradable patterns I'm looking for all the time. Now, the rocket ship pattern, very rare to set up, and that's why I am pretty excited about the potential in NQ, NASDAQ, QQQ. Very excited about the potential upside. Now, this one right here, yeah, it looks like we're getting continuation lower right there. Right down, and possibly making a bottom right in those targets right there. GEV, GE Vernova. Yeah, played out for now. I don't really, there's no roadmap line. There's not enough history. Could go up to 226, but right now there's just not enough chart history after this thing spun off of GE to do much on. Ride, big decline. That may go lower low. That's kind of the bubble pattern, just accelerated just a few candles. If we looked at the smaller time frames, we might see something in there, but yeah, it just looks like hype and just dropping out. Cal. Now, I also do Elliott Wave stuff, and coming up at, what, 3 o'clock? I'll have a guest spot on it's a guest spot. I don't know. I guess it's timing research. I'll be doing a guest spot talking about Fibonacci and Elliott Wave stuff and how it all ties together. So if you want to come see me, link is in Discord. I guess I could throw it in here. Threw it in here the other day. Let's see. Grab the. It's in the announcements channel. See right here. Copy text or copy the link. Copy the link. Copy the link. Copy the link. How do you copy the link? Cool. Copy and let's throw it in here. Right there. There we go. Hey, thanks, Rob, for becoming a channel supporter. So Cal, not great looking. That's a potential 3-wave up on a bigger time frame. Retrace to the roadmap line on the weekly. If we don't hold it, we may go lower. Folk, FULC, that's a therapeutics. Pharmaceutical. So there's like 4 things that don't typically follow my patterns. Biotech, pharmaceutical is one of those. That's anything the Food and Drug Administration of the United States is involved in. Sometimes it just does its own thing. This looks like a 3-wave potential right here. Type measured bounce down $2. ARM, that's the bubble pattern, probably. It sure looks like it. We went pretty exponential. Got a little violence in there. 3-wave up. Consolidating in here. If we break above, though, break above that 155, 156, we may go make a new high again. It may not be played out. That's the hardest part of the bubble pattern is when is it done? When's the euphoria, peak euphoria? I mean, we get pullbacks and humps and bumps along the way. Some violence. But when's it peak euphoria? That doesn't mean you can't make money on the up. It also doesn't mean you can't make money on the down. But those are dangerous when you find them. ARM, AMD. ARM is one of those right now that has the potential to go back down. It left a gap down here, has potential. RYAAY, Rainier Holdings, turning down off the resistance. Has resistance right there at the roadmap line. That may go lower low. We did hold a measured bounce. We do have a stock split coming up out here. Not sure why you would split the stock at these prices, but hey, whatever. 5 for 2, 5 to 2. Oh, what a weird split. What a weird split. They're trying to get the price back at some ideal price, I guess. Stock splits, regular splits lately have not been very bullish. This may dip down to the 85 area. Tesla. Salah. Still working on the breakout here. If we break above that high from a few days back, it's likely that we're going to rally up to this high. And if we break above that, 350 is the target, and then 500 above that. I am bullish on this to go higher. MU, turn down, back to the support zone, holding really well. This could be a giant measured bounce, could be a double bottom, and this could lead to a large upside potential to 200, maybe 250. BNTX, another biotech. That thing came up shy of the target, probably going down. Venom, Viper Energy. Looks like we're coming back to the roadmap line. XCH, not enough candles to tell you anything about. Just 3 candles. Bonus trade of the day, Amazon. Amazon. Check this out. Did this large retrace here. Look at there's the entry right there. Look at this, 22 trades in the history, 95% profitable, 21 profit factor. The upside potential on this one is like $24 right now, right here. Right there. Average lasts about 20 days. I would go 3 times longer. At least. Be careful. This may go fast, May go very fast. So here's the deal. Here's the deal. If I can find Discord, because I just had it and I lost it. Cool. One of these things. Man, where did I do it? What did I do with it? Oh, there it is. Found it. Here's the statistics on Amazon. Open browser, pull it over. Look right here. Target 208.38. Stop 150. That is a very large potential, but it's also 24 points upside, 95%, 21. Like I just showed you, all the things. 20 trading days on average, 22 trades since 1997. That is a beautiful, beautiful setup. I may play some options on that with that large upside potential and the relatively short duration right there. We'll see. If I play an options trade, I'll throw it out at least to the Tremar Trading Lab group, maybe to everybody. We'll see. And there you go. Beautiful, beautiful. I mean, this is like best of the best stuff right here. Look at that. Look at that profit factor. Look at that percent profit. Look at that history. Look at that. 22 trades. Not quite a statistic population, but highly, highly likely we're going to get some continuation up there. Now, you may say, well, JT, 20 days, so that's only like 3 weeks. Why would you go out so far? Now, first off, that's trading days, not calendar days. So 20 trading days is actually 28 calendar days. So that's 4 weeks. All right. Why? Weekends. All right. The market isn't open on weekends. We don't make candles on weekends. So that's 4 weeks. Now, why would I go out longer? Because average is average. All right. You get 2 trades. One's below average, one's above average. Two of anything. The average is somewhere in the middle. That means that even with 22 trades, it's unlikely we hit 20 trades every time. So 60 bars out here. We put it out 85 days. That's 3 months. So we're looking at December options at the minimum. Maybe you want to add, maybe you want to be a little extra conservative. Maybe you want to go out 5 times, 100 days, 100 trading days. Put out 146 calendar days. So we're looking at February. So you would want to be something further than February 5th if you want 5 times longer than the average for this to play out. Now, this may go fast. It historically has gone pretty fast. And right up there is the target. All right. Let me know in the chat or in the comments if you like the bonus trades right there. Pretty sweet one set up today. That's the entry right there today, right now, right here, right now. Beautiful potential. Beautiful potential. I'm probably going to take that one because it's too juicy. Too juicy right there. Beautiful opportunity. Bias for the day. Watching for this breakout. Watching for this breakout. If we can confirm the breakout, game on. Game on right here. Game on. Now this will take a few days, and I do highly, highly, highly caution you against the FOMC meeting next week. Remember they can disappoint the market, and we can get a knee-jerk reaction. That could be another pullback coming up on the 18th. Right there. Be aware. Be very, very aware. Wednesday, September 18th, 2 p.m. Right there. And then Jerome Powell will speak at 2:30. It's a volatility event. Unknown reaction. Right now, we have tipped the odds. We're likely to go up, especially if we break like the bias right there. If we break above that, very, very likely we're going to come up here. Now, if we somehow magically get up here before next Wednesday, the reaction is probably going to be this. We had that very same setup. Very same setup. Right back over in July. I cautioned right here that if we rallied up, we're going to get a big drop. And we did. It went way faster than I thought. So be careful. Bias for the day is looking for that breakout. As long as if we don't break out, we're just staying sideways. That's the bias right there. Bias for the day is sideways until we break either up or down. Stay in the range. Could just stay in the range. If we can break out of this up to there. If we break down below here, watch out. 5,300 is the tail right in there. There you go. Be safe out there. Be careful out there. See y'all later. Have a great day.